Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. Very event-filled week. Obviously, the presidential election, we had the big Fed decision at the November meeting, and the market's reaction is absolutely interesting. We saw US stocks rally after the presidential election. Let's talk about which sectors were rewarded the most. Interest rates headed higher. The US 10-year Treasury reached its highest level since July. And also, the Fed, when we look at expectations, expected to stair step down lower, perhaps a little less aggressively related to some expected Trump policies. Now, US stocks had a very significant rally on November 6th. This is the performance from the close of November 5th. Remember, election day was Tuesday, November 6th. Trump was largely expected to win that. By Wednesday morning is when most of the announcements in anticipation of that victory were in place. So November 6th, November 7th, the 2-day period after that, take a look at the performance we saw. Pretty widespread performance, except there on the bottom, you see those interest rate sensitive sectors, real estate, consumer staples, utilities, all in negative territory. Healthcare just about flat. Some of the big winners, financials, that's very similar to back in 2016 after Trump won. You saw small caps, you saw regional banks do very well during that period. We see that again, a lot of this in anticipation of deregulation, perhaps lower taxes, perhaps tariffs, things like that. We're looking at some of the winners, most of it around that economic growth story that we saw in 2016 and 2017 from that change in tax policy in late 17-18. Now, take a look at yields. This is the US 10-year Treasury yield is at its highest level since July, just above 4.4%. That's significant because the yields have actually risen across the curve, especially on the long end of the curve, since the Fed started cutting rates in September. That's pretty abnormal, except we need to remember the long end of the curve is not as tied to the Fed cuts. Remember, the Fed is only controlling that overnight lending rate at the central bank. They have less control on the long end of the curve, and we have seen rates move higher for a couple reasons. Whenever the economic growth is expected to be higher, you sometimes see this yield curve steepening where long-term rates increase higher than short-term rates. We've also had a yield curve inversion, and 10-year and long-term rates have been suppressed. But the other part of this story to unpack is that with the Trump presidency, when we talk about Trump's policies in terms of perhaps lower corporate taxes, perhaps tariffs at certain countries, certain products, even some of the immigration policies, these could impact inflation, the labor market, and the overall expectation of higher economic growth, perhaps a little bit more inflation pressure by some of these policies. You're seeing rates headed higher, especially on the long end of the curve, but pretty much across the curve overall. Now, what's this mean for the Fed? Remember, there are two dual mandates: inflation, price stability, and labor market. Labor market's really tight right now, right? There's an equal amount of supply, equal amount of demand, or not really tight, but it's back down to that normalcy, a more normal level. Inflation's been coming down, but there are some pockets that are relatively sticky when we're looking at it. If you look at the Fed probabilities, it's the market's expectations. You can see, remember, after that Fed cut of 25 basis points this past week, we're currently at that 4.5 to 4.75%. You can see there's a 68% probability that in December, the Fed is going to cut one more time, 32% probability that they're going to stay put. But if you look out 1 month of January, you see that 93% chance that the Fed's going to be at that 4.5. So market is basically saying over the next two meetings, we're only going to get 125 basis point cut. Whether that's they're going to pause in December and cut in January, or more likely, if you're looking at these numbers, market's saying maybe one more cut in December and then a bit of a pause by the Fed in January. These numbers have come down a little bit, and we started to see expectations. If you looked at that cut in September just 4 days ago, that was about 83, 85%. So we've seen the expectations of the Fed cutting aggressively come down, most of it related to what I talk about, the market's anticipation that perhaps some of Trump's policies will be strong for economic growth, maybe cause inflation not to drop as much as it would without those policies. So market's still figuring this out, especially when you're looking out far. The Fed probabilities are not that reliable, but we are starting to see a shift in expectations for the Fed related to Trump being president. With that, let's take a look at our Story of the week. Interesting. Ruby slippers. All right. Anybody remember these? Take a look. Some of our, I remember this when I was a child, but some of our older viewers as well will remember the ruby slippers from The Wizard of Oz worn by Judy Garland. There were several pairs worn by her, but they're getting put up for auction. Why is this significant? These pair of slippers were actually stolen back in 2005 from a Minneapolis museum. Somebody took a hammer, crashed the little display case, and stole those. It was recently recovered by the FBI in an investigation. There was about a 78-year-old man. I believe he was convicted, but given time served because of his health condition. He had stolen them in some sort of a I owed the mob story and thought they were filled with real rubies and they were going to be able to get a lot of money. So that didn't happen because there weren't actually rubies or just sequins on those slippers. But good news, back up for auction. State of Minnesota surprisingly has put aside $100,000 in anticipation to be able to buy another pair for that museum. They've also raised some money, so they will be in the bidding, and it looks like it's probably going to go for several $100,000. It will be interesting to take a look at what that goes for soon. With that, I want to thank everyone for watching, and I'll see you next time.